in New Delhi that will take place today beginning at 3 p.m. is going to be crucial for the money markets, which have been the main trigger for the equity markets outside of the NBFC scare. I'm referring to the borrowing meet between the government and the Reserve Bank slated for 3 p.m. today. In fact, we are expected to see a press conference by the Secretary of the Department of Economic Affairs today evening at around 5:30 p.m. We'll get you full perspective on that. My colleague Ruchi Bhatia is, of course, tracking the borrowing meet very, very closely. Ruchi, what are the expectations? A lot riding on this. Look where our current account deficit is. Look where the rupee is.
Absolutely. In fact, it is important to note that despite the current macroeconomic scare, the government would want to comfort the markets. They would want to tell the markets that, they will be following the path of fiscal consolidation. They will walk the path of fiscal prudence, despite this being an election year. And remember, as you rightly pointed out, Nayantara, the bond yields have spiked over 8%. So the government would want to give signs to comfort the market, not unnerve them. And which is why today's H2 borrowing program meeting holds a lot of significance. There is, of course, an expectation that the government may announce further reduction in borrowing. This borrowing cut may be over and above than what was announced in the month of March. The government had estimated an FY19 borrowing of close to 6.05 lakh crore rupees. H1 borrowing was about 2.88 lakh crore rupees. And this as the government had announced lower borrowing of about 50,000 crore rupees in H1. Now we're expecting the government to reduce their borrowing program even further. Let me tell you what are the two reasons behind it. First of all, if you remember last week, the government had announced hike in small savings schemes by about 20 to 40 basis points. And post that, there is an expectation that there will be a lot of interest in small savings, and that is going to help in, giving some sort of a comfort to the government in terms of providing funds. Second of all, of course, the government is looking at trimming their bond buyback program. So that would mean that the government can go ahead with lower borrowing in H2. Whether they're going to bite the bullet or not is something that we will have to wait and watch out for at about 3 p.m. Also,